All right, let's bring in Roger Ferguson. Of course, he is former Fed vice chairman, also a CNBC contributor. And Roger, the Fed futures are now betting that there are going to be 5 rate cuts this year. Is that what you think will happen?
No, I do not think that's going to happen. I think that's a market in wishful thinking, hoping that Fed bails them out. I think prudence on the part of the Fed would be to stand tight until we sort this all out, because I think inflationary risks are strong and inflation expectations have been moving in the wrong direction. And let's not forget, inflation itself hasn't really come back down to the 2%. So I think the market is optimistic, and I think it would be unwise for the Fed to listen to the market at this stage.
They're pricing in a 99% chance of a June rate cut. What's the earliest you would anticipate a rate cut would come? How long will it take the Fed to really feel like they know what's happening?
Look, I think it's well past June, and I've said a few times, I'm not sure they're going to get any cuts off this year, because they also have to think about the inflation side of the mandate. And they were late to the game the last time around. Some of their inflation credibility was nicked, let's put it that way. And I don't think they want that to happen again. And so if there are cuts this year, and to me that's a big if, it's certainly the second half of the year until we sort all of this out or get a better sense of what actually is happening with the economy. This labor report, as someone said, shows that the economy is still steaming ahead. You know, roughly full employment, increasing jobs at somewhere 130, 150,000 every month for periods of time. This is not a weak economy. It's not outrageously robust, but this does not call for cuts in an emergency sense or at the June meeting in my regard. In my estimation.
What do you think the economy is doing right now, Roger? I mean, the jobs report is a month old. I feel like we need data that tells me what was happening yesterday and today.
Look, I think the economy is still on an even keel, but certainly growing slowly, let's say roughly at potential. I think that 4% unemployment rate is telling us the truth, but there's uncertainty. And so I think that the risk is a gradual slowing as we see uncertainty in the C-suite, not being sure how much to expect in terms of CapEx, not being sure how much to expect in terms of adding more labor here. You also had something I think that's really important, which is the number of our major companies that are selling overseas and are trying to sort that out. So if we took a snapshot of the economy today, I'd say still in pretty good shape, but with some anxiety, some clouds hanging as uncertainty still plays in.
Roger, tell me what the world would look like if you felt comfortable to cut interest rates.
Oh, I think we'd have to see greater clarity that the risk is mainly to the downside and that we've managed to get rid of inflation. I think the stagflation problem is the biggest challenge for central banks trying to figure out which way to go. And I think as long as there's inflation in the air, and there certainly is, it would be unwise for them to signal that they're only moving in one direction. They need to hold on to that inflation credibility.
Some people feel that way, Roger. We were talking about that earlier. It's going to be hard to kill this economy, probably, even if everything that's getting thrown at it right now.
All the more reason to stand pat on interest rates, Joe.
That's what I mean.
You've been sort of arguing, I think, maybe we should cut rates, but I think, let's stand pat. The economy has not yet fallen off. I'm not sure it's going to.
Is this tariff inflation you're worried about, Roger, or inflation that's still around?
A little bit of both, frankly. I mean, certainly tariff inflation doesn't help at all, but we did not get inflation down to 2%. It was coming down slowly. The last report showed some good signs, but some things that were worrying. So the background here is one of an economy that still hasn't gotten fully, out of the inflation headache that the Fed was fighting. Now we've got this new stimulus towards inflation potentially in tariffs, and so. I think we need to be very even in our assessment of where we are here.
Roger, thank you very much.